What's up, money lovers? Welcome back. So I've had a lot of people asking me, what should I do with my stocks? They're getting absolutely clobbered. Stocks are falling from the sky. They're down 50% from their all-time highs, in some cases maybe even more. How do you navigate the current markets? Stocks won't stop dropping. What do you do? We knew interest rates were coming. We knew that they were going to hike the rates at some point. It had to happen sooner or later in order to do something about inflation. It was inevitable. So whether or not the interest rates are already priced in, as you could argue that the market has already corrected or it may continue, there's no way of knowing for sure when the bottom will be. Only time will tell. Here's what we do know. Lots of companies, especially higher growth, more speculative plays, are getting absolutely punished. A few of the ones that I own, namely Tesla, Palantir, Voyager Digital, SoFi. These types of companies have been going down a lot. So you may own these companies, you may own some others that are newer, maybe even more speculative, higher risk, higher reward, high growth. You need to just ask yourself a simple question. Has anything fundamentally changed about these businesses? In many cases, these businesses are actually doing better than they ever have been. In the case of Tesla and Palantir, the growth rates are astronomical. Are they crashing for any reason outside of the macro news and these interest rate hikes? If the answer is no, then the company is fundamentally sound and it's still in line with the reasons in which you originally invested in it. In many cases, like I said with Tesla and Palantir, for example, the company may actually be in a better position now than they were a year, 2, 3 years ago. Palantir continues to have great earnings report where they grow the commercial end of the business by 50% or more each quarter here, and the stock continues to go lower and lower. So if you thought the stock was a good buy when the stock price was double what it is now, then it should be a screaming buy at a 50% discount where it currently sits in a better position with a lower stock price and an even brighter future. It's simple. As long as you're a long-term investor, nothing's fundamentally changed with the company. As I said, in many of these cases, they've actually gotten better fundamentally, then it's a great buying opportunity. So stocks may continue to drop for another week, another month, another year. There's no way of knowing when the bottom will come. But if you're investing for the long term, it doesn't matter. Companies that are growing today and continue to grow and flourish over the next 5 to 10 years, you can bet the stock price is going to be a lot higher than it is today 10 years from now. Keep everything in perspective. Don't get too caught up in the short-term, market. Now they're talking about the great rotation out of tech back to these reopening plays like airlines and travel. Give me a break. You don't want to be in those. They were terrible businesses before the pandemic. They barely were making any money. And now, you're gonna sacrifice great companies with very bright futures for an off chance that maybe vacation travel goes up a little bit. No. Stay with your high conviction plays, do yourself a favor, and view these short-term dips as buying opportunities. That's what I'm doing. As long as you believe in the company, you've done your research, you've done your due diligence, and you strongly believe in them, nothing's changed fundamentally, there's no reason not to buy more at lower share price level. Let me know what companies you're planning to buy more of in the comments below. I just purchased some more Tesla today at an average cost of $1,010 a share, and I'll be holding these shares for the long term. Let me know what you think in the comments below, and don't forget to subscribe. This is Vinny from the Investment Club, and I'll see you next time.